All right, Squadron, let's go ahead and get airborne for our primary live trade briefs. Beautiful day here in South Florida. Looking forward to a good night tonight at the Hilton on the beach in Fort Lauderdale. Got a big event to go to in a little bit. A lot going on, man, but not a lot going on. It's funny. Uh, Absolutely embarrassing watching the testimony of former Senator or Director Coates from the DNI and the head of the FBI. I really don't think there's any Republican left in Washington. What a farce those hearings were. The only collusion that has ever happened is between Hillary Clinton and those agencies and the DNC. It's awful, and they made up this bullshit, Russia collusion thing. So it's awful. Okay, can everybody hear me? Somebody just said they don't have any audio. Everybody good? Is this thing on? Hello, hello. Yeah. Okay. Good. All right. Thanks, guys. Awesome. Thanks. All right. We have a lot of good stuff going on, man. Brazil, Amazon. We got a great win iron condor. We haven't done an iron condor in a while. Again, it's hard to do an iron condor in a market that's just doing that with everything else. But we got a great looking situational iron condor on with win that should be looking pretty damn good and printing some money, including a good looking bull put spread, another one that we added yesterday. So great stuff going on here with our portfolios. Okay, obviously, well, if you're not familiar, of course, what's going on down south, and actually here in South Florida, there's a lot of carnival, a lot of good stuff going on down in Brazil. It is, Edmund, exactly. Happy Fat Tuesday, man. It is Fat Tuesday. What they say, like millions of people down, what's it, the 300th anniversary down in New Orleans. I could think of not a worse place. Literally hell on earth would be to be in New Orleans right now. Can't stand New Orleans. God, I used to party there, obviously. Naval Air Station, New Orleans. I used to fly in and out of there a lot. There was a sister squadron, an F-18 squadron down there, the River Rattlers. And I actually did a layover one time there for FedEx. So I got to see Beale Street during the day. Oh, my God. You want to? We can call our own cities shitholes. New Orleans is a shithole. It smelled like whatever during the day. You can only imagine. I couldn't stand it. How gross. But anyway, down in Brazil, we have Carnival going on. And there's they actually had floats with gun-toting like gangsters, and the favelas. So there's gangsters in favelas. I mean, holy crap. But yeah, I guess not safe for work here. Yeah, look at this. That's on a float. And there's dead people and kind of a little creepy. A lot of big parties down here in South Florida. But anyway, what am I talking about Brazil for? Let me get a hell yeah if you're loving EWZ. EWZ has just been a gift that keeps on giving. We've traded this thing in every direction and have nailed everything in EWZ. I think we had one losing trade in probably the past 6 months, and I've been trading it 2, 3, 4 times a month. This is pretty damn cool. So like what's going on in the EWZ, we'll review our existing positions here in a little bit, but we have we put on 2 new spreads last week, Amazon and Brazil, and they are looking great. You bet, HH, those are Keltner channels that I have up, and that thing is hanging right in the middle. Okay, so here's a good headline that helps our China. And I have written down to talk about China. We just got to get back into FXI, and we'll talk about that in a little bit. But look at this: rattled by U.S. fiscal monetary tug of war, investors start looking abroad. Welcome to the party, man. Here at TGO, we've been doing some good work abroad with our Brazil and FXI. So you don't like the volatility? Come join us down in Carnival down in Brazil. So. People are starting to look at emerging markets. I get it, folks. There's a reason that many of you know that I call these Captain Kirk trades, boldly going where no man has gone before. And I guarantee you, Star Trek was made today with William Shatner, they wouldn't use that phrase. Boldly going where people, they'd use the Justin Trudeau people. And they're going to change the name from Manitoba, Canada to Peopletoba, Canada. Again, what a jerk. So looking for places to hide. So China, Brazil, those BRICS that we talk about, Brazil, Russia, India, China, South Africa. This is where we've been. So we'll talk about this. This looks like the S&P 500, folks. This isn't. This is China. So obviously going back and forth across the Pacific, we're kind of mirroring each other. So obviously we're starting to bottom out in the FXI here, but this is a pretty good entry point, especially if you look at the fact that this was a hover point, this like mid 40s, upper 40s, and then they took off with us and then flew formation with us. So, if anything, maybe I'll save FXI for an academic session, because I don't see a trade in here right now. Our front month selling front month at the money calls, and who was it? Kevin, you asked yesterday. I'm going to answer your question that you asked yesterday that I punted to today, because I wanted one more day to see if what we're going to do here. So, because Kevin asked yesterday, hey, Wiz, is the front month, call selling at the money or bear call spread strategery on hold? And I said, give me one more day, and this is why I won it today, because this is a dead cat bounce, guys, and I'm telling you, I had a great call this morning. Everybody's doing when are we going to break to a magnet? So let me ditch my father and mother stock market mentality. The old days said we didn't like being between the 50 and 200-day moving average. I might have to change this, and I had a good call with some buddies today that this might be kind of a new normal, is to ditch that way of thinking. So, Harry, my FXI Gen 20 is up 41%. That doesn't suck. So, Tim, why do they always use traders with deer in the headlines looks? Well, it's funny when they're talking about rattled markets, they can always find a rattled trader on the floor, which is comical. But so we like our Brazil trade. This is definitely a yes. Like I said, to some of our, we got 50 new full throttle traders. This is definitely a Jan 20 trade I would put on EWZ, and then we definitely look at getting into this and trading some front month spreads, but we'll debrief that in a couple minutes. Yep, the SPY puts that we look to add on expire on Friday. David, as a hedge, real quick, if you're asking, there wasn't a specific, so that was a statement. So David, I leave hedges on. I don't touch them. I set it and forget it. A hedge to me is an ejection seat. It's not like I climb inside of my jet to fly over Iraq, take the ejection seat out and put in extra gas, because I don't think I'm going to get shot down on that case. So I leave my hedges on. So exactly, it's insurance. Oh, John, did they already changed it to where no one has gone before? Oh man, I should have known they'd do that. All right, so look at this, folks. I get it. I'm a deficit hawk. I hate spending. I want to live within our means. But look at this. We ran. Can anybody in this room tell me the last time they saw that headline? The federal government actually ran a surplus in January. That is a shocking headline. So it's great to see the parties flip-flop. I'm a libertarian. You guys know I can't stand Republicans or Democrats. Exactly, Mark. That's probably the last time. In the research, it was Ronald Reagan. So the last time we ran a surplus, I think, was under Reagan. Somebody said maybe it was Clinton. Well, let's just say it's a long time. So we have collected a record number of freaking coin. So I get the $20 trillion deficit sucks, but all the Democrats foaming at the mouth didn't say an effing word when Barack Hussein Obama added more debt to us than every president before him combined. Did you hear that word, combined? From George Bush to George Washington, you take every piece of dollar they laid on in debt on top of us, combine it, and Barack Hussein Obama added more than that. So don't give me any of this bullshit. Republicans are the spending party now, and Democrats are fiscal conservatives. It's politically expedient, okay, and it's ridiculous. So anyway, one of the reasons I brief you on this is, I hear some of the rumblings through the trees that, one of the reasons we're seeing the stock market volatility is we're running deficits. Are you retarded? I've never heard a dumber statement, and I actually said that to the person who said that to me. I'm like, are you retarded? So this rally under Ben Bernanke and Janet Yellen, and added $10 trillion, $11 trillion to us. You're telling me that pullback is due to, well, first of all, they didn't understand what volatility was, so maybe I should preface it with that. So they were kind of retarded. So exactly, Giles. That's what I am. I'm enough. I want to donate enough to the kitty to take care of a Navy, an Army, an interstate highway system, and what else? I don't know. Not that much. We don't need a TSA. We don't need a Department of Energy, Education, all the other bullshit. Leave me alone. I'll throw enough money in the till that we stay United States, but get out of my life. And it cracks me up when politicians go to Washington, the Senate and the Congress. I'm like, stop legislating. Why don't we just take like a 2-month break from writing new law? Don't we have enough laws? It's nuts to me. Dan Quayle said that when I read his book years ago when he was vice president. He had a good thing. He's like, why don't we just stop? Why don't we just take like a 6-month break as far as legislation is concerned? It's awful. So, Glenn, so the JP Morgan synthetic stock is weak on the short term. I rolled down the protective put from the 90 to the 80 strike and pocketed $1,800. Would you consider this okay? Glenn, hey man, anytime you're going to ask me if pocketing $1,800 is okay, good. They were just talking about JP Morgan on the halftime show and the financials. Well, let me get into that in a little bit. Let me finish my strategic and operational brief, and we'll get tactical. But hey man, and just like the guy in the song said, go on, take the money and run. So we had a great small business survey. Record number of U.S. small business owners say it's a good time to expand. This is awesome. Remember, under this report, almost 9 times out of 10 under Barack Hussein Obama were miserable. Everybody remember Obamacare, right? Hey, sorry, Mrs. Smith, I know you work 40 hours a week here, but I'm going to put you down to 29 because I can't afford to give you health care. Can you remember that happening, folks? And the media trying to twist and contort themselves into how somehow that was good. The poor lady lost money. She had to go get a barista job, or however you say it, at Starbucks to make up for the it was awful. So now small businesses are finally peeking their head up against the out of the trenches. And exactly, Mark, we're really seeing business. I'm seeing in all my networking events down here in South Florida that businesses are having a tough time finding people. That's a great thing. So this is good. Great news for the economy. Okay, so let's get a little more operational. Stocks are kind of wallowing here. The Dow's down triple digits. Now it's down 90. We're just kind of hanging out here. Energy is still getting beat up a little bit, and healthcare. Why is healthcare getting beat up? Look at this. Amazon jumping in the pool, man. Remember a couple weeks ago with JP Morgan and Warren Buffett? JP Morgan jumping. Hey, we're going to sit down with Jeff Bezos and Warren Buffett and see if we can fix this healthcare thing. Let me get a hell yeah if you're in the Amazon bull put spread from last week. Look at Amazon. What was that, 1370? We'll brief that in a couple minutes, but holy shnikes, man. What a great 1 week trade. And this thing is looking very, very good. We'll take a look at that in a couple minutes. So 2 really, really good trades in a week. Good. A couple hell yeahs and a couple wows. So good. That's good to hear. But so like I said, folks, to be honest with you, people are talking about the return of inflation. We've gone from this is like the politicians flipping in a week, guys. Is this politicians, Democrats going from spending like drunken sailors to Republicans spending like drunken sailors. Now we've gone from we're in a deflationary environment to inflation is going to be an issue in 2018, literally. Folks, I remember years ago, being long the GLD is kind of a hedge against inflation. What a stupid trade. I bailed out of that years ago. That was a dumb old stock marketism because we were actually in a deflationary environment. Couldn't stand the GLDs. Just stopped trading it. So the short vol trade, I think, is it's rebalanced. It ain't over with. I got to be honest with you. One of the reasons the VIX is still high is because people are getting back. I know. Oh man, they're good drinking buddies, but some of them aren't the sharpest tool in the shed. They're like, well, this is the perfect time to short vol. I'm like, oh Jesus Christ, man, did you not getting half your portfolio wiped out? They're like, drug addicts, man. They, be short vol trade they're getting skittish. Are we waiting for CPI? This is bullshit. They think the sell-off was due to total inflation. I know, Shrek. Isn't that funny? Well, that's because financial reporters who don't understand what the word volatility, skew, what the SIBO is, that's because idiots are in financial media, Shrek. I couldn't agree more. Them saying that this they've all kind of rushed to what is volatility, the Google search to try and figure out why exactly we had this market pullback. It has zero to do with inflation, guys. I'm sure there are obviously traders who, Rick Santelli probably trades based on that. That ain't me. So, Doug, we actually have a bearish double vertical on VXX right now, and I'd be looking and we have a weekly bear call spread on it. So, Doug, I like that trade. Absolutely. Okay. So, so stock market valuations look appealing after last week's sell-off. So, stop. Despite upbeat earnings for companies' earnings, share prices were considered expensive by historical standards. So, what was it? The S&P, the PE of the S&P 500 was upper teens or 20 or low 20s, whatever it is. I don't care. I got to be honest with you. I don't care about any of this stuff. How many of you care about Amazon's earnings per share? What was it? A couple of years ago, Trade Monster, their PE was what? For my memory, where's Fish and Diane and everybody? Remember like 3-4 years ago? We were Trade Monster. Trade Monster didn't have enough decimal places. The PE was about 3,000 on Amazon. So if you were using old stock market mentality, would you ever buy Amazon? No. The earnings per share thing, it's a little bit of old stock market. Now, Wiz, don't give me this crap because you just said, a couple months ago with the Trump tax cuts, the average company would see an 8 to 10% earnings per share increase. Yeah, because that's tradable information. Amazon's earnings or PE of like being a 3,000, you didn't care about because the dude was sacrificing everything to take over the world. So he did if you build it, they will come, and it's working out for him. So I'm not being a hypocrite here. It just makes sense. So these people, where is it? Companies in the S&P are trading at 60.5 times earnings, which is, it was 18 times earnings a couple weeks ago. Yeah, so I was right. So we were in the upper teens. I got to be honest with you, I really don't look at this metric anymore. Me, 10, 15 years ago, oh yeah, I'd be all over this stuff. Nobody cares. So, yeah, exactly, Mark. But Amazon is an average. You're right. That's a good point. But what I'm getting at is like the earnings, when I bring up anecdotally that earnings per share on your average S&P 500 company is forecasted to go up 8 to 10%, I view it as a trader, not as I don't care about the earnings per share type of thing. That really isn't one of my metrics. I'll be honest with you, it was 5-6 years up until about 5 or 6 years ago. Now it doesn't matter. And why does it also not matter? You ready for this? Looks like we have a Powell put. Here it is. Right here, stocks bounce after Powell vows Fed will remain alert to financial stability risks. Exactly, Graham. Growth, growth, growth. So look at that headline, folks. So the new Fed chief, Jerome Powell, said what? He was asked about, hey, man, this, he had his ceremonial swearing in. This is his first public statement since the change of command of Janet Yellen. What happened? And since last Monday's Volmageddon, we will remain alert to any developing risks to financial stability. Let me translate that to you for the trader. That is, let's spell it together, HOPIUM. So Jerome Powell more or less just said, you can keep on smoking the hopium. Everybody's going to get a trophy in this market. I'll be here to put a Band-Aid on your boo-boo. Exactly. First day on the job, he got scared. So, all right. So let's go ahead and his other comments were, quack, quack, quack. Amazon, like I said, hey, man, to be a major hospital supplier, if you can't, I've been saying this for years, guys, and years ago I said, who is it? Where are my long call diagonal folks? Where's Scott? Who else? What's the name? Greg? Who else is Greg's in? Greg, you got to be printing money in your long call diagonal. Or Kevin, who are my people who actually got into the Amazon long call diagonals? I know it. One contract is ain't cheap. What was it, like 20-25 grand? But when you're up to 50-60 grand, that's we're looking at percentage gains. Who are in the long call diagonals? Bill's in. Greg. Oh yeah, Greg. So Bill, Greg, Kevin. Didn't you eventually enter Richard, one of my Commanding Officers Club clients? I think he finally listened to me after like the thing wouldn't stop going up. So Kevin, that's right. You did synthetic stock is up 8 grand. Other Kevin. So Kevin spells is with an A. Other Kevin spells it with an I. Kevin said, I use this correction to open a Jan 20 call. Nice. Okay, very, very good. So we'll talk a little bit more about Amazon in a couple seconds here. As far as events, there's really not much. What's today? Tuesday. So we talked about the small business index, which has never been like more bullish. The government ran a surplus. Tomorrow, so like Shrek was alluding to, that the market might be in a little bit of a holding pattern right now because we're waiting on inflation numbers tomorrow. Are you retarded? Tactically, the market might ripple and move around a little bit tomorrow. But I got to be honest with you, who cares? It's stupid. Harry, still printing money this year with Amazon, second to the VXX. Yeah, man, our Amazon trades have been the only loss in Amazon, knock on wood, was a couple weeks ago with a weekly bull put spread. I'm done trading Amazon tactically, but we have been printing money in Amazon. I think that's the only losing trade in Amazon in months, and it sucked. But guess what? What else do we have tomorrow? So tomorrow, we get retail sales and core retail sales. And for those of you that don't know what the hell's the difference, just click on the little folder here. Core retail sales are what? Core means just whenever you see the word core, put in the word excluding. So core retail sales is X autos. Okay, so and then regular retail sales is everything in the kitchen sink, including autos. Okay. Greg, my Amazons are up 158% on my Jan 2019 and flat on your new 2020. Makes sense. Awesome. Good. Isn't that funny, Brad? That Brad nailed it. The media, the liberal media, the financial media says what? Deficits are exploding. Republicans are hypocrites. And there's a surplus in January. I mean, you look at the tax revenue alone from an Apple, an Amazon, all these guys that are bringing back cash from overseas. Democrats should be frothing at the mouth that they're getting this money. But no, oh my God, this infrastructure plan. Wait a minute, are you Democrat? Do you want Moose and Rocco to get a job so you can take credit for it or not? What's your pick your argument? All right, let's get tactical. Real quick, like I said, kind of like the earnings per share thing, I kind of ditched a couple years ago. I'm getting ready, and this is a big career thing. I'm getting ready to ditch the nobody likes being in here. This is, as I told you the whole time, this was not panic selling, and nobody's doing the, everybody's still kind of waiting for, I don't know who's going to do it, the all clear, but it kind of, we're kind of hanging out. Okay. And the market, to be honest with you, to me, it doesn't feel like we mind being in here, which is weird. That's why I think a lot of people are hesitant. Institutional money that I talk to and hedge fund buddies, because I got to be honest with you, this looks like the biggest. Look, I wish I could get. Oh, let me swap out highlighters here. So look at this thing. Let me use a pen. So look at this. This looks like the biggest two dead cat bounces I've ever seen in my entire career. So we are, to be honest with you guys, we're, lower lows and lower highs. That's not necessarily super bullish, but again, I'm no technical trader, chart technician, CMT, any of that crap, but I know kind of what I speak. There's people behind this, so you can't just look at bars and lines on a graph. So the people behind this are still in a holding pattern. That's why, Kevin, I told you yesterday I wanted to wait and see. I don't think, as you guys know, this wasn't the big one, Elizabeth. That's why somebody asked about the hedges earlier, or the SPY. I never take off hedges. Remember what happened last year, guys? We had a hedge on. I think it was a volatility hedge last. It was like it was in a PLTB. Somebody's like, "Hey, Wiz, the VXX bullish double vertical expires on Friday. What are you going to do with it?" I'm like, and this was back when it was a hedge. It wasn't a trade. It wasn't a trade, a hedge, and anything like that. And I said, nothing, man. With my luck, something will happen Friday. And, what happened Thursday? Anybody remember that trade? We were sitting in a webinar. It was like down $2,000. I'm like, well, that ain't down. I gave that ain't down $2,000. I'm just a little creeped out right now. What happened Thursday afternoon at like 1 o'clock? The Jim Comey memo, and the VIX, the market imploded and the VIX went through the roof. So it went from being down $2,000 to up $4,000. We closed that trade for a $4,000 profit on that Friday. So when you're talking about hedges, guys, exactly, Patrick, it was Comey. Nice job. Good memory. So, Werner, I would look at the last webinar, or I would look at the webinar. You got to watch. I'm like, every time I say the word webinar, you have to do a shot. So you have to, Werner, you have to watch the webinar from last week where we put the SPY puts on, because that was a long discussion on hedging. So I make sure you watch the replay. That's why we record these. Patrick, I remember because I lost money. You know what's funny? Sorry, Patrick, it's not funny that you lost money. It's funny because a bunch of people didn't listen. That's why you guys are here, is to listen to my lessons learned. But sometimes, Patrick, you have to go out and learn that yourself. Now, to be honest with you, Patrick, I ain't Nostradamus. And of course, I didn't know Jim Comey was going to come out with a memo on Thursday. But guess what? When you have the mentality as a portfolio manager of, I don't care, I lost a couple grand, but my longs made 20 grand. I wouldn't mind making 18 and paying 2 out of pocket, or making 20 and paying 2 in insurance. Does that make sense? So, okay. So you ready for this? I'm going to stay market neutral here, guys. I feel like it's mid-December where everybody's just kind of hanging out. We are waiting. We're waiting for another leg up or leg down. I don't know if we channel in here waiting for the next earnings, but you know what? That's a month and a half away. Can you channel like this? Yeah. Look at that kind of sideways-ish move up. That was 2 months, or there was a month and a half of a little sideways to slight climb pattern. As we predicted last year, I said, I think next year volatility is going to return. It's going to be brief but violent swings. And we've been right so far. We said we'd take a break in February. I just didn't think it was going to be that. So, all right. Yeah, we're turning green. So let's get tactical. Let's get physical. Olivia Newton-John, man, had a crush on her. Here we go. Let's debrief last week's trades. I've filled on both of these, so these are both looking good. We have the Brazil, the March 2nd. So this has got some serious time value on it. The 43, 42 and a half, we got filled at about 15 cents. Let's just pull up the EWZ. Again, they're all, I don't even know if the Bovespa's open. Man, they're out. They are having Carnival, 43, 42 and a half. 43, 42 and a half. It said 15. It's flat. I thought it was up a couple $100. Well, whatever. It's flat. So this is a, if you're not in this is I like this trade. So let's just bring it up right now. If you didn't get filled on this one last week, this is I like this one. So, let me get a show of hands or a yes or no. How many of you are in this one? So this is a good looking trade, and the metrics are just about the same. Glenn, Greg not yet, JW not filled, Edmonds in, didn't get Jeff. Okay, David missed it. Mark, I'm up $7. Mark, I think that's what I look like. I was up a caramel macchiato. So yeah, it's flat. So this is a hold, and this is I would add this trade today if I weren't in it. Okay, so this is a hold. So for all of you who said I missed it or I didn't get in it or not filled, here it is, man. Here are the metrics. Let me review it real quick, just like I should. It's 150 of the March 2nd, 43 puts, and buying as a hedge in case I'm wrong is this one. Okay. And then here's the analytics. The trade metrics are risking around 53 to potentially make 23. Alrighty. So if you need to look at that anymore, just go to the replay from last week. Okay. All right. Now Amazon. So last week we covered a Amazon 1370, 1367 and a half. The 1370. Dennis, I'll be on the road to a 5-week ski trip. Where are you going, Dennis? That's awesome. We're heading out to Aspen in the middle of March, spring break. Dennis, I like the trade. So this Amazon trade is risking 55. Look at this one. This is a little bit, it's 500 more. Look at the potential gain in this trade, $3,200. Why? Well, because it was meaty, folks. Let's get into our Amazon charts here and what's going on with Amazon. Why? Because this didn't look good, did it? What's that look like? well, before last week. When was last week? Right here. So that's not necessarily technically a good-looking chart. Granby, Vale, Beaver Creek, and oh my God, man, you're going around all of Colorado. We were a Vale family there for a while, and then we switched over to Aspen. So, but yeah, I like to trade. So let's look at the. This is also March 2nd, correct? I put some time on this one. What, and remember last week, folks, if you watched the replay, I said what? I'm going past the choppiness of this. I'm going past the, we're stuck in between we're not going to stay in between these two 50-day moving averages and the strategic mindset of being, cautiously bullish. 1370, it's not even listed here. So let's sell the 1370 and buy the 1367 and a half for 70 cents. What did we get? 93. So that's 23. We got a 23-cent gain with 35 contracts. Is that $700? 35 times 23 cents. All right, so up $800 in a week. How many of you are in this one? Let me get a hell yeah if you're liking this one. So this one's up about what, 25%? A little bit more than that. David, good. JW, not filled, still good. Brent, nope, enter now. David entered yesterday. Well, guys, I mean, let's take a look at the metrics. What did I do, 30? Let's take a look at the current trade and take a look at the metrics. If it's still good now. Yeah, I like this one. Same strategic mindset, same everything from last week. So this is yeah, Jan, you asked earlier about a new Amazon trade. I wouldn't put a new one on. This is the existing one. So we're up $800 already. See how this is potential max gain of $2,000? This one is a potential max gain of $3,200. So we're already this trade's already up $900. So yeah. So the EWZ and the Amazon trade, look at this. We're getting extra free trades. So yeah, this is a yes. So let me go back to the screen here. Yep. I like it. Glenn, is bearish double vertical and VXX. Can vol collapse before Friday? Glenn, let me save that towards the end because that's not. Well, let's do our portfolio review, Glenn, and then we'll talk about vol. You bet. Of course, vol can collapse by Friday, but it can also have a rip your face off pop. Okay. So let's go ahead and we'll talk vol here in a little bit. All right, let's get into win. And guys, do me a favor, and Edmund, I see your question about MGM. Remember, if it's not in this portfolio, I like saving it towards the end because not everybody is in the different portfolios, and it confuses and people. So let me save it to the end, and if we have time. If not, you can always post it in the ready room. Okay. So here, 2 weeks ago on February 6th, or I'm sorry, right here, 3 weeks ago, the win. Here we go. The win spread. So we put on a 160, 157 and a half bull put spread. Okay. And we talked about getting out of this one for a nice 50% gain in a day. So how many of you got out of this one? So this was what, like 50% in a day. And we talked about, hey man, if you're making 50% in a day, go on, take the money and run. So the potential max gain in this one was $2,000. Shrek made $1,000. Brent, Jan, Rick. Yeah, so we sent out a text, Chuck raising his hand on win. So nice 1 day, quick in and out. Now, we covered a new bull put spread, different portfolio. Is everybody back in a new one on win? Because we talked about a 157 and a half, 155. Good. So there's an iron condor going on right now, which is looking all good. Exactly, Kevin. Dennis, Matthew, good. Excellent. So win. I can't stand golf, but when I used to play golf, I love, when you hit a good one and you just stand there. Now, of course, I don't want to frickin' say anymore because I'll jinx myself and something bad will happen. But it's going down the fairway nicely, and it's doing really, really good. Here's why I'm stepping back and looking at it is because this is what's going on. When I showed you the article, the Exactly, Mark. Golf is the only game I get worse the more I play, or better the more I drink. So this, Wynn Resorts brings in a top law firm. They're going to expand the board with, like, of course, more sexual harassment people and more two people. Uh, you know, there's good and bad stuff going on. So this is definitely Iron Condorable. This is why I'm glad we closed out the 160. I like the 150 because this obviously Skipper resigns, quick 1 day, $1,000. Pays for half a year of your annual membership and shit hot. Now we have an Iron Condor on the 170, which is looking tight. We're $6 away. What was this rally? 163 to 170. That was a big rally, and then we gave most of it back. So I don't know what they could come out with in the next, week and a half, where something's going to have rip your face off. Exactly, Brad. Rip your face off. Jan, we covered the other day in the portfolio where I talked about the new Win Bull put spread. I said absolutely I would enter the Iron Condor today. So yes, I like the Iron Condor. The 170 is still a good looking bear call spread. The 170, 172.5 up here. And so here's the existing Iron Condor. I'll draw it. Where's 150? There's 157.5. 155, and then we have the 170, 172.5. So it's a little tight, to be honest with you, but this is looking pretty good. Exactly, Dennis. The Iron Condor is nice. No increased margin. If you're not, what is that, like session number 6 or something like that of our full throttle training? So we'll talk about Iron Condors if you're not super savvy with them. But like I said, everybody has access to all the previous training, so you can always get a little jump on everything. So, all right. So Win is closed for a nice 50% profit in a day. So this VXX, this seems like a world ago, February 9th, the bearish double vertical, because the end of the world and then the not the end of the world. So let's go ahead and talk. Where's volatility? Let's take a look at the VIX. So this is a good looking chart for what? For volatility. It's stair stepping down. It's not doing what? It's not doing this. Well, it sucks. This is such an outlier event because vol would spike and 2 days later it'd be over. Oh my God, uncertainty, and it's over. It's taking its time to come down. Why is it taking its time to come down? Because people have to do what? They are not slowly, they're still unwinding their shorts by doing what? Having to get long vol. There are still people unwinding. So there's still some buyers of this VIX that is keeping it slightly elevated. There is nothing, no, I can't say that. I was going to say there's nothing fundamental going on here. There is. The fundamental thing going on is what? Not everybody, that some people think that this was or is the Fred Sanford. This is a dead cat bounce, and we're going to do that. I don't feel it, man. I can be completely wrong. That's why whoever asked about the SPY puts by Friday, I'd say, oh my God, you keep those things on. Friday is a world away, man. Friday is literally a year away in this market time. Okay, so the VIX is remaining elevated because people are still buying it because they have to unwind positions. But I'll be honest with you, the VIX is still elevated because people think this is still this ain't over. Boink, boink, boing. That's I've seen that in a lot of Skype conversations I've been in. Anthony, that's exactly the way I would say it. The SPX is in no man's land or no people's land since Justin Trudeau, he's just my favorite man in the world. Oh, sorry, I just assumed his gender. So this is why the VIX is remaining elevated. There's a lot of old stock market people out there like me going, something's got to give. Either we're going to do that or we're going to do that. And, I prefer that, but I'm going to be hedged for that. That's what's going on right now. Okay. So, Anthony, great question. Where's it going, to the 50 or the 200? My call sign's Wiz, not Nostradamus. I can't tell you exactly, my friend, but we can use our brains. We can use our strategic, operational, and tactical and say, all right, all the bullshit idiots that said, hey, it's part of the deficit. We're running big debts. Moody's might downgrade our country. We ran a freaking surplus. The record number of small businesses are bullish. You can't find me some negative market information. Oh my God, Wiz, inflation. Okay, I don't even know what the hell that is. Really? Come on, man. So, Anthony, if I had my druthers, like I said, a week and a half, I'm still sticking with. The other day, this one freaked me out. I'm like, oh shit, and that plumbing, that like oil drill down to the 200 test. Uh, no, I'm going to stick with my. I don't sound like a politician, man. I'm market neutral, but I could be honest with you. I'm itchy. I'm cautiously bullish. Look, the Dow's up 60 points now, and the S&P is up 8. So it feels like we want to go higher. And don't sit here and do this whole feelings thing. I got to be honest with you guys. I knew almost every jet. Each squadron has 12 F-18s. You feel the airplane. When you have 3,000 hours in the airplane, you know what to do based on feeling. Trust me. It's kind of like the Force, man. Turning off your targeting display like Luke did. So, Arabi, it's a good point. So market expiration next week, some volatilities, you're right. A lot of puts might expire next week, worthless and all that type of stuff. So options expiration definitely throws a little bit more volatility in there, and that might, kind of signal the all clear. I'm not a super big technical analysis guy, like I said, but every time, if you guys don't know this, and this is a big blowout one, but whenever you see the moving average convergence, divergence, that's called the MACD. So there's a MACD crossing right there. And what happened? The market ripped your face off. There was a MACD crossing right there, and then we implode. So this wide thing right here looks like it's what? Trust me, technical traders look at that type of thing. I hear it on conference calls. I yawn a little bit, but I throw it into my filing case. Okay. All right. Let's go. So more or less, I'd stick with so we have a weekly bear call spread on the VXX. We have to come up with a new word, a new 2 words. It's almost like Oklahoma or a football play, because I hate saying this. You ready? I hate saying we're short vol. It makes me physically, it makes my hand shake. But you know what I'm getting at. Short vol means we can all get killed. But these are spreads. It's not like we're short vol. We're naked on the VIX and all that stuff. Everybody understand what I'm saying? So, Tamara, Amazon, Win, SPY, and VXX are all up right now. What's up, as you say? So, market up, VIX up, something's up. Did the VIX swing? Oh, the VIX is still down a little bit. So that tells me if the market's up and the VIX is up, something would be up. But so this is I don't know, man. Maybe the groundhog didn't see his shadow there. And then the end of January, folks, we had we had Amazon and JP Morgan trades. I think the JP Morgan trade blew out, right? Because just the Volmageddon. But let's take a look at somebody asked earlier about JP Morgan. Very nice bounce off the middle of this Keltner channel. I can't say enough good about JP Morgan. I love Jamie Dimon is a hell of a lot better than Lloyd Blankfein at JP Morgan. Bank stocks have room to run in a slow motion economy. The guys on the halftime show on CNBC on Comedy Central did a good job with this. This is how many. Let me take a temperature here. How many of you are in a Jan 19 or a Jan 20 JP Morgan? Barnes, JW, Edmund, Ed. Okay, good. Math, everybody, good. Chuck's in both. Awesome. So a lot of them. Mike, short vol equals whizzing. There you go. We're whizzing the VXX. Mark's got JP Morgan and Morgan Stanley. Good. All right. So everybody, I mean, obviously this little bit of a pullback, it dented our longs a little bit, but that's what, and Kevin, I punted to today for a reason. I still think, so I'm going to ditch my 50-day and 200-day moving average type of trepidation with, I still would start selling front month upside calls. Maybe instead of at the money like I was aggressively last week. Last week I did, and I know this will peel off some of your faces, some in the money short call selling. Be very, very, which worked. But then very short, they were Friday, so I ain't doing it this week because, hey man, Dow's up. Here we go. So I would go. So to Kevin's point, I'd go back to the maybe selling front month upside calls that are maybe about 5 to 7.5% out of the money. Okay. Brad, can you believe that? I haven't covered that, man. I'm just so disgusted with Wells Fargo. What an awful group of people, and I get it, a handful of people, but wow, that is awful. Glenn, synthetic stock with JP Morgan, you always do at the money. So I wouldn't, necessarily add to my 115s. I'd put a new one on at 112. If you did the 115s out the Jan 20, you might even get it for a credit. Why? Well, no, these, never mind. Yeah, well, no, these puts are. They're in the money. So if you did a synthetic stock, let me just do it real quick. Let me map it out here. You know what? It's flat. We almost could get paid to do synthetic stock on JP Morgan at the Jan 20. Isn't that freaking cool? And obviously the 112s wouldn't be. So let's look at the pricing difference. What would the 112s be? Oh, they don't have them. You'd have to do the 110s. That's weird. That doesn't make sense. 110, 115. Now something's now this pricing's off. I noticed this earlier today when I was playing around in here, getting ready for today. So, Greg, your 2019 JP Morgan is up 11.5 grand, 94%. So, folks, let me show you what Glenn has to say here. We have two, or Greg. I'm sorry, not Greg and Glenn are posting right on top of each other. So there you go. Look at that. That's awesome. So folks, if you're sitting there like, these Jan 20s or, Jan 19s ain't sexy, they're boring, or the Jan 20s, folks, that ain't boring. How many of you would like to make, 12 grand? Greg, what's the time frame on that gain? Because again, it's not weekly options and stuff like that. So, but it's oh yeah, there it is, guys. No shit, man. Thank you. Good catch, guys. Graham and whoever else caught that. Let's go back to the 115s. That made no sense. Check your Switchology, whiz. So I am right. It's not E-Trade. It's WizTrade. So look at this, folks. If you did synthetic stock at JP Morgan, our old synthetic stock, what was it, a month ago? Last month we did synthetic stock at the 115 strike. Let me get a hell yeah if you'd like to make $1,500 by getting long JP Morgan out to Jan 20. This is awesome. I love Kevin's up 13 grand. Awesome. So guys, look at this. Let me get a hell yeah. So now let's do some Obama teachable moments here. Now let's go down to the 110. Is it still a credit? No. So look at that. So this would be a debit. The one trade I just showed you, you get paid to do it, right? Because it's where? It's up here at 115. We're down here at 113. Does anybody not think that JP Morgan is going to be above 115 by January of 2020? Glenn already rocking it on JP Morgan. Good. Even my new Full Throttle member should be doing really nice on JP Morgan. So if anybody, we had a pretty good roll call there. I don't know, about 50, 60 people were in it. We got a couple, almost 200-300 people in here. If you're not in the JP Morgan Jan 20 synthetic stock, I'd look at the 115, to be honest with you. And you're bringing in, some serious money. Now, well, you know what, guys, let's just do this. I've worked myself into a discussion here because I don't want to I hate scraping people off into the wall. So let's just take a look at the synthetic stock here. Remember, and I think that's like our lesson number 7 coming up in Full Throttle. We'll do a webinar tomorrow night, guys. So Wednesday and Thursday night at 7. So you'll get a reminder email for that. So we'll do 2 this week, Wednesday and Thursday. So synthetic stock is, you don't get 2 things with it, right? You don't get to vote because you're not a shareholder. You don't own the actual damn shares. We're using options. I don't want to own the shares. And the other thing you don't get is a dividend. I'm not a dividend trader. Maybe I am for my mom, or if you're fixed income, or you buy utilities because you want a nice little dividend, knock yourself out. I don't care about a dividend. That ain't me. So if you don't care about those 2 things, why would you go out and buy the damn stock when you could potentially go out and use options? So when you remember options 101 the other night, when you buy a call, you're bullish. You think the stock's going to go up. When you sell a put, you're also bullish. So when you buy a call and sell a put with the same strike, 115, and the same expiration, you get magically what is called synthetic stock. So just take a look at the P&L here. This is the most basic P&L you've ever seen when you first started investing. There's JP Morgan. If it goes up a buck, we make a buck. that's P&L 101 right there. That's the P&L chart for synthetic stock, right? So, oh, you know what, Harry? I forgot about that. You know what? We might not have to not do that tomorrow night. Never mind. We might just do it Thursday. Thank you, Harry. All right. So, but obviously everybody, even my newer Full Throttle members, the first place, even though I was drawing over here, you guys should have looked was where? Holy crap. Are you smoking crack? No, it's too early. Guys, Wiz, you're going to risk, what's your max risk? Essentially the stock right here going to what? 0. Can JP Morgan go to 0? Of course it can. Everybody remembers Jim Cramer doing his Khrushchev impersonation, pounding his shoe on the desk about Bear Stearns and how safe it was at $70. Isn't that awesome? And then Bear Stearns went to 0. So did Lehman Brothers. So yes, folks, if between now and January 2020 there's another financial crisis, Bear Stearns, oh shit, I just screwed us. JP Morgan can go to 0. Will it? What are the odds of that happening? 0.0. Mr. Blutarski's GPA at Faber College. It ain't going to happen, in my opinion. But, and again, guys, I don't give financial advice or any of that crap. So did Enron. Good point, Craig. A lot of stocks have gone to 0. How many of you liked Lucent at 100 and 80 and 70 and 50 and 10 and 0? Or Pets.com. So, or one of my favorites was eLottery. I was in it. So I don't like talking about margin or anything like that because obviously you need to talk to your broker, your registered investment advisor, or Mr. Barnes about that. I can't. But what I am going to tell you is that if you want to potentially not risk this, what could you potentially do? You could, Crocs, oh my God, you could potentially go out and do what? Buy what Wiz calls a protective put or a disaster put. Now, exactly, folks. You could throw on, but I got to be honest with you, 20% below the stock price right now is, maybe you look at a put. Let's add. So add option, go out to Jan 20. It would be a put. I don't know. Let's just take a look at 2-year chart. I mean, we loved it. Remember when it broke 90? When it was trading in the 80s, I was like, oh my God, guys. Maybe you just, and again, I usually put it 20% underneath, but it's not a waste of money if it does what? If it frees up margin. So let me play with this. And you should be doing this on your own, guys. When you throw some disaster puts on, you should play with it. And obviously, maybe you do, I don't know, 5 contracts. And to get it, I'm okay with that risk, guys, to be honest with you. So you have to play with the disaster put. And I got to be honest with you, folks, some of you may not need it. Again, this is Wiz talking on the public square to everybody, not to you specifically. I'm talking to the nearly 300 people in here that how many of you did your homework and went out and Googled portfolio margining and looked it up? How many of you, so about portfolio margining, MS, why would you do synthetic stocks, $1.50 credit? The underlying is trading at 112, so you need it. MS, hold on, that's a lot to read. Let me get through this, and then we'll, Glenn, if you can't figure it out, just give your broker a call. What I'm getting at, guys, right now is that, to be honest with you, I don't need disaster puts. I'm talking as Edward Matthew Buckley, the investor. I don't need these, to be honest with you. Manohar, why don't you like Goldman Sachs? That's a long discussion. Let me finish my tactic here. So I got to be honest with you guys. I don't, and again, I'm not giving you investment advice. I'm talking about Wiz. I'm talking about Edward Matthew Buckley. I don't need these. So as an instructor, as a as an instructor and manager of these portfolios, we use for training. Sam, I'm going through this because out of the 70 people who said they have it on, about 30 to 50 people said they don't have a Jan 20 on. So I'm adding this in here for those people. If you already have one on, don't. If you got the 115 or the 112, I stumbled into this because somebody was asking about, would you do it at 115 where we did it a month ago, or the 112? Okay, so that's what I'm doing here, guys. So if you're in this, just indulge me. This is a good discussion anyway. But I would sell some front month upside calls. I would take a look at these, maybe the 116s. So I would go out probably to, let's let the dust settle a little bit. So when you guys have heard me recently say, hey, Kevin, I'd get back into selling the front month, meaning March, upside, what did I say, the 116 calls. So this is what this trade should look like right now. And what did selling those calls do? Sell. Sorry. Didn't do anything because the chart looked weird. I am bringing in some premium by selling these 116 calls. Okay. Tim, it seems less out of pocket during synthetic over an 80 delta call. Tim, if you've done the research, man, I haven't looked at both of them and put them together and drag raced them. You're probably right. So this might be better than doing the long call diagonal. Absolutely. Harry, I'm in a Jan 19 for JP Morgan. Now I'll jump into a Jan 20 and let it ride. Guys, that's how I do my long call diagonals. I'll have a Jan 19 and a Jan 20 on if I like the damn stock, because this time next year or next December, what are we going to do? The Jan, not that I want to wish my life away here, guys, but the Jan 21s are going to come out, and this is around the time we close the what? The Jan 19s, hopefully for about 40, 50 grand profit. Does that make sense? It should. So, okay, but what I wanted to get at here is let's do a front month. So just have 3 legs. Sam, no, there's 4 legs right here. See this? Right here. This is the synthetic stock at the 115. This is a protective put, which I don't need, and then this is the front month upside call. Does that make sense? Oh yeah, Sam. If you don't want to throw the front month on, you'd only have 3 legs. And to get back to what Kevin was asking yesterday, it's like, hey Wiz, you said start. Because I said, hey, now that the market's chopping around here, I would get, because we stopped, guys. What was it? Maybe a month and a half for 2 months, guys. I stopped doing what? In almost all of our Jan 19s and Jan 20s, I stopped selling anything in the front months. Why? Because you get run over. Just sit there, enjoy your peanut noir, making money. Don't sit here and run in front of. That's like shorting vol. It's stupid. But now that we're chopping around doing this crap, vol is elevated, so options premiums are elevated. So get back into selling some front month upside calls. Does that make sense? Okay. Sam, so is it okay not to have the front month? Of course, guys. The selling of the front month upside call, that's optional, man. You could just sit here and let this thing go for 2 years, as JP Morgan goes up, you'll make money by Jan 20. But so you can do what? You can make money 2 ways with this trade. You make money with JP Morgan going up, and you also can make money by selling the front month upside calls. But Sam, that's not a requirement. No. Well, actually, you know what? I lied. There's 3 ways to make money on this trade. JP Morgan goes up, we sell some front month upside calls, or we do what I'm going to do is do what? I'm going to put on a bull put spread right now. so we can do that. Harry, I'm confused why you might not need a disaster put. So here's Harry, I'm talking about me. So Harry, the guy, we had some good wine out in Tahoe. We had some cigars. Harry, I'm just saying in my portfolios, not the ones I'm managing here, I don't need disaster puts, because there might be enough coin available where, and a margin, portfolio margining, where the max loss, that I just showed you of 120 grand ain't whatever it was, 150 grand. Does that make sense? So I'm talking about me, Harry. I'm not. So that's why I showed that trade with the disaster put, and we had a little bit of a discussion about it. Does that make sense? Sam, I mean, earlier we have taken 5 contracts for JP Morgan. Is it okay to get into synthetic? Yeah, absolutely. Yeah. Mike, so 20% off the current JP Morgan price is 90. Using the 90 instead of the 100 saves us 280. Mike, I love it, man. That you did exactly what I told you to do, Mike. You sat there and played with it. I said play with the disaster put, and Mike did it. So, Mike, that's absolutely better to me. I like the way you think. Hell. So, using my old wizism of I would place the disaster put 20% under the current stock price. Why do I say 20%? Because that's no shit a disaster. If JP Morgan went down 20%, we're, Christ almighty, North Korea, we're all goose stepping in a parade. Something horrific happened. So, Mike, yes. I like your math. So, but anyway, guys. So let me put a fine point on this. We can make money 3 ways in JP Morgan. The long call diagonal or synthetic stock increasing in value because JP Morgan goes up. We could sell some front month upside calls, or we could start trading front month put spreads. Okay. All right, guys. Fish, why not do the 120 strike? You can. We had a good discussion just now of the 115 versus the 112. If you use in the money puts, guys, you bring in a very, very nice credit, don't you? Steve, good question. The answer is no. So, ladies and gentlemen, let me put this out right now, and we're kind of doing a full throttle training session on synthetic stock. I don't touch the disaster put. I even forget when I use them, guys. I don't. A disaster put to me is a hedge. If you got that kind of time and inclination to roll the disaster put up or down, or the only time I've ever touched, you ready for this, guys? The only time I think in the past, I'll just say 5 years, that I've touched a disaster put was when? Does anybody remember? Fish, Diane, you guys that have been here back, I think it was, no, it was longer than this. That's the 5 year, whenever it was. Like, I had some disaster puts on it like 100, and Apple went through 100 briefly, and the disaster puts were positive. And exactly, Kevin. So when Apple imploded, and remember when it broke 100? Does everybody remember this? I love the financial media. Apple broke 100 right here during this time frame, and everybody's like, it's over with for Apple. The disaster puts were green. So if your disaster puts are ever making money, you should do it. It's what? That's why I don't mind having them on. It's first of all, it's cheap insurance, but it also adds what? The disaster puts to me are like a master caution switch in my cockpit. If the disaster puts are flashing green in my face like this, that gets my attention to, should I be in this? Because we only pick Jan 20 or elite positions that are what? Are freaking solid companies. I ain't doing Tesla, Twitter. I'm not doing companies that I don't think, or ETFs that ain't going to be around in a couple years. So use your disaster put wisely. I don't touch it. So if you want to actively manage your disaster put, knock yourself out. I don't, man. I don't touch it. Eli, but they help margin. So guys, let me say this again, and there's 1,000 questions flying around. Let me be totally clear. Eli, I don't thank you for saying that, because I'm going to say Eli said that. Eli says they help with margin. The answer is yes to that. That's why I would use them. So just like I told Harry, I don't use them, guys. Wiz in his Edward Matthew Buckley portfolio. In this one, this Top Gun Options Primary Life Trade Brief portfolio, I have to trade differently because I'm doing some teaching here. But talking about margin, guys, is giving investment advice, and I can't do it. So Eli, you nailed it, man. You get a gold star. They absolutely free up margin, because if you don't have them on, the E-Trade risk department goes, hey, dude, that JP Morgan trade could go to zero, and we're going to margin you accordingly. You can't pick up the phone, Eli, or even Wiz. I can't pick up the phone and go, hey, guys, it's Wiz. JP Morgan ain't going to zero. Don't margin me like that. Click. They're not even going to – they probably would laugh first and then hang up on you. So the answer is exactly that, Eli. Very well said. Glenn, great discussion. You are answering everything I've been wondering about. Oh, good. Well, guys, this is That's why I should have snapped myself out of it when I said this is like a full throttle training session, because I want to put a bull put spread on here and we got to get moving. Let's get back to JP Morgan, because we got to get a trade on, and then I got to get down to Lauderdale. I love the middle of this Keltner channel. Obviously, the financials held up pretty damn well during Volmageddon. Why? Why did the financials hold up? Well, because they are going to have an epic 2018. If, as Shrek and I were laughing about, people are worried about the CPI or inflation or the Fed, the banks are going to print money in 2018 as interest rates go up. So everybody listen to this wizism, and it's not cute because but there's an issue with this. You ready? When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Except what? Except financials. Let me say that again. When interest rates are high, like Jerome Powell said he's going to do, we're going to raise interest rates. Stocks will die. Why? Money's more expensive, guys. Steve Wynn, God rest his soul, ain't going to go out and borrow $1 quadrillion to finance shit. It starts impacting the bottom line. Money costs more. Who likes an environment when money costs more? The fricking financials love when money costs more. They stick it to you and I. I remember my parents' mortgage of like 18% or something like that. Yeah. So ladies and gentlemen, we love it. So here's what I'm getting at. This is my commit criteria. During Volmageddon, JP Morgan, Morgan Stanley, and other financials held up pretty damn good. You got it, Graham. Financials and transports tend to lead us into and out of bad and good in the market. Think about that. Okay. So, Patrick, they don't necessarily write fewer loans. Patrick, remember, for the past couple of years, I got to be honest with you, I had to give up my firstborn to refinance this house. You got to be shitting me. I think I had like 800 credit at the time. It was like my top secret investigation clearance for the Navy. I'm like, are you people retarded? So, we've gone from, waitresses making, 30 grand a year getting $600,000 loans 10 years ago to what? To a guy like me, I'm like, are you kidding me? I'm jumping through this many hoops. So I don't think they write less loans, Patrick. I think they just make more. I think they're going to write the same amount. So, okay, I got to get going. So the 109s, man, right here in the middle of this Keltner channel, the financials held up during Volmageddon, and I think they're going to keep holding up. We might have to go out a little bit more. The 109, 108s. Yeah. No, we might have to go out a week. I think with the financials, well, that's not too bad. I wouldn't do an iron condor. This is absolute. Don't sit there and go, well, Wiz, we could reduce our risk by don't put a cap on the financials, guys. Because we could, out of nowhere, see a rip your face off rally out of these guys. Maybe let's go out one more week. It's a high probability iron condor. There's a reason for this. Why does this look, Sam, I talked about this for 30 minutes, man. So are we not taking the JP Morgan synthetic trade? We have two of these on. We have the 115 and the 112s. They're existing positions. So I was answering a question. I got into a full throttle training session. I'm pretty sure I answered that. Watch the replay. If not, I got to do this bull put spread. I'm looking to sell 75 of the March 9 109 puts. Okay. And I'm going to buy as a hedge the 108s. Okay, it's right in the middle of this Keltner channel is the 109s. If you're a little frosty, you could even look at the 110s. This is even the other day when the market was down, JP Morgan was up a little bit. So I like this. These are nice. This is a good looking trade. Selling 75 of the 109s, buying the 108s for a 23-cent credit. This is obviously called a credit spread, but more importantly to Wiz and everybody here at TGO, we call it by its tactic. It's a bull put spread. I'm bullish on JP Morgan. I'm using puts, and it's a spread. Bull put spread. Okay, let's look at the metrics. Max potential loss is a little north of my $5,000. Okay, $5,800, but I'm okay with that because I like JP Morgan. And it's a very high probability iron. Shut your mouth. It's a very high probability bull put spread, $1,700. The risk to reward is right around that 1 to 0.3. It's a good trade, guys. Let me just grab a screenshot of this. This is the trade I would put in this portfolio, or I am putting in this portfolio, but let me, with a little birdie in my ear, let me show you the more aggressive trade. And I'm not saying aggressive is in a bad way. It's just a little bit more risk. But this one is mo better. And let me grab for the text. Glory be hallelujah, man. Everybody's getting text alerts. So I like this one a little bit better. The 110, 109. I like that one. Yo Soy liked that one a little bit better. So the Dow was down 180 points today at our low, and now we're up 80. Welcome back to volatility. Primary live trade brief right here. And we'll get into the whole adjust. How do we adjust and eject trades? Jan, I don't have any Amazon trades on. Do any now or full iron condor? Jan, you've been here the whole time. What did I say? We covered the Amazon trade from last week and said I would put it on today. PLTB new, JP Morgan, bull put spread. If you missed anything, guys, watch the recording. We covered Amazon, the existing Amazon and Brazil trades at the beginning of the webinar for like 20 minutes. So March 9 expiry, EXPRY. I'd sell the 110 puts. I'm doing the 109s. I'm doing the 110s. I'd buy the 108 puts, but this is the trade I'm going to be managing, not the 110. I'm doing my own. Whoa, that was stupid. 23-cent credit for today. I'd go about 3 cents. About 3 cents wide. I'd go down to about, not equal sign, plus or minus 3 cents. I'd look to maybe adjust this trade. Remember, we want this full credit, man. We want 23 cents in our pocket. When? By the March 9 expiry. If this starts going up to 28 cents, 35, 40, that's not good. Remember, that means JP Morgan's going down. So we want the full credit. So I have 2 points in my trade, maybe just one. If at the adjust point, it's JP Morgan's imploding, why am I going to wait for an eject price? Here's the adjust price. About 75% of the credit that I took in. So double is 46, maybe, I don't know, about 38 cents. Whoops, 38 cents. And maybe eject. My good rule of thumb, what the hell is that? I'd adjust at 38 and eject around double the credit that I take in, which is about 46 cents. Okay. And I'll blast that one out. All right, that's a good looking, Harry, the market's at 17. What trade are you looking at? There's no way that thing went up 10 cents. Edmund, I want to make sure I put the trade question on MGM paper trade in the right place to get some. Edmund, yeah, just in the general ready room, member ready room. Yeah, you can put it under live trade briefs. You know what? I think there's just a general forum here, right here. Oh, who asked about the Jeff? I got to answer your thing about the broker platform for vets. If you're in here, Jeff, it's TradeStation. Don't get me started about TradeStation as a business, but TradeStation as serving veterans is freaking phenomenal. Harry, when I put the position on 17 cents mid-market, I don't know what's wrong, Harry. So yeah, Jeff, it's TradeStation. Commission free, man. I got to be honest with you, Jeff. They didn't even ask for like a DD214, man. They didn't ask. You bet, Mark. You too. Shrek. TradeStation sucks, but you can't beat free. That's exactly right. So, Sam, you're a Vietnam era vet. First of all, thank you for your service, Sam. Sam, you could have served when I did in World War I, man. Everybody. Fish was the guy that pointed that out. So hats off to Fish. Okay. Kevin, after 18 months, I'm getting text messages, the gift that keeps on giving. Edmund saying thank you, Sam. A lot of people are thanking you for your service, Sam. So yes, so Jeff, Sam, they didn't even ask for DD 214. I just said, hey man, I'm a veteran. I hear you got a deal. They're like, done. So not that. And for first responders, I don't know if we have any cops or rescue squad or firemen. It's also, you bet, Jeff. It's also for first responders. So to Shrek's point, I'm screwed because I'm like, who's that guy in Young Frankenstein? Marty Feldman, the dude with two eyes, guys going in separate directions. I gotta do my shit on Trade Station because, no offense, like Shrek said, that's about $6,000 a year in commission savings for Shrek, and he's a mid-active trader, man. Me as a career guy, now the Dow's up 91. As a career guy, it is that is a shit pot of money. Giles, did I hear correctly? Free trades for veterans. Ladies and gentlemen, yes. Everybody, listen to me. If you are a veteran, I'll put it on here. If you're a vet or if you're active duty like Shrek, Steve, and a couple of other my buddies that are here, if you're a vet or you're active duty, you go to Trade Station. And let me give you the name of the guy to contact, even though I'm not happy with him. If you are a first responder, a fireman, a police officer, a rescue squad, you also get commission-free trading. Matthew, my head is exploding, but I'm getting there, Wiz. Hey, Matthew, man, you're in Pensacola, Florida, going through flight school like I did. Just be a sponge, Matthew, and I guarantee you, man, you're going to be a Jedi Master here soon. So keep up the good work. So let me give you the contact info for the dude at Trade Station that you need to call for all my vets, for all my friends. Everybody's my friend here. Let me grab this. Charges per options contract. Giles, I don't know what they charge per options contracts because, not to rub it in, I get it for free. So I don't know what they charge, man. Not to rub that in, but yeah. So I don't know. Fish, or maybe some of your buddies can. All right. So let me hook you up with his info right here, guys. Copy. All right. So everybody, let me put this in the chat box. I think you can copy and paste out of the chat box. So here you go. And I can put it in the replay. I'll put it in the replay email. And let me put this in. Can you guys copy that? Let me know if you can copy that. Tamara's saying it's $4.95 plus 50 cents a contract. Bob, the execution's average. It's about what I expect with the retail brokerage. It's average. Okay. So yeah, or take a screenshot. Whoever said that, duh. Yeah, take a screenshot of that, guys. If you're a veteran, so to all my vets and all that got. So yeah, and Dennis, obviously, yeah, you can call your own Trade Station rep, but if you want to, guys, just tell Mike I told you to call, and he'll hook you up. Like I said, I'm not happy with their business development, but whatever. Rob, you guys are lucky here in Canada. My broker wants to charge $159 in commission for the JP Morgan trade. Rob, are you freaking high? Holy Christ. Rob, I think my first mutual fund I bought through USAA in 1991 as an ensign in the Navy was like $150. $10 plus $1.25 per contract. That's fucking robbery. Somebody, who's your broker? Or is that like a private broker? Fire that dude or that lady. Questrade, get out of that shit. Can't you guys in Canada open like a Fidelity or Thinkorswim? I know E-Trade isn't up there. He should, man. O'Hara, I agree. Tamara's saying, hey, no, they don't all charge the same, Rob. I've never heard of that. Interactive broker. Go to IB, Rob. They're or negotiate, man. Or like Shrek just said, call them and negotiate that shit. No way, man. Interactive broker. This is where you need to go, Rob. This is awful, man. I'm glad you said something. These guys do Canada. That's highway robbery, man. I've never heard that. All my Canadians, man, get out of that. So Manahar saying they do Canada. Ernest, he's right. I'm with BMO Investor Line. Ernest, I've never heard of that brokerage firm. David, I called Fidelity and got $1 off regular prices just by asking. Harry, whiz to the rescue. Everybody listen to me. Stop. If you're paying anything, look at TradeStation. TradeStation, what Tamara just said, $4.95, and then whatever per contract, guys. Stop. Get out of those. I've never even heard of either of those brokerages, to be honest with you. Stop right now. Mark, I know IB is cheap, but the platform sucks. But guys, when you think about it, if you're watching me kind of set everything up and step by step, the platform could be. There's a free brokerage out there. What's the name of the free broker, guys? It's there. There's a commission-free trading platform. So, guys, you don't need a TradeStation where it's like super complicated, guys. So Robinhood, that's what it calls. Yeah, Robinhood. I don't think they do options yet. Tasty Trade is free to exit. So guys, get out of those. For all my Canadian brothers and sisters, get out of those awful brokerages. You're getting robbed. First of all, Robert, I guarantee you, if you call them and threaten to leave, hey man, I'm going to close my account because I'm going to head somewhere else. They will absolutely negotiate. And if they don't, well, then you need to leave anyway. Does that make sense? So, okay. Ernest, we can't open accounts south of the border. You absolutely can. I'm showing you one of them that does Canadian, guys. E-Trade does not do Canadian, guys. Fidelity and the international brokers, guys, like TD Ameritrade, guys, is in Canada. It's our 51st state, they jokingly say. Absolutely, Interactive Brokers, they're on the screen right here. And I love this guy. Thomas Peterffy is a great American, man. Born in Czechoslovakia or under the he has got the American dream story. This guy, he ran pro Donald Trump ads on CNBC during the election. This dude is a great American. I trade here just because I love the dude. I've met him. So, all right, guys. Can the Canadians get together? Where in Canada are they? Kings, why don't you guys post in the Ready Room? You guys should all kind of post and do something. It is a good Ready Room topic, Matt. I got to get going here, guys, because I got to get down to Fort Lauderdale. I have a big event tonight, and I need to get this trade out here. So, Mike, you're in New Orleans. Thanks, and happy Mardi Gras from New Orleans. Be careful, man. So, all right. So, Jim, I'm not adjusting the VXX. If I didn't, I save that to the end. Let me spend a couple more minutes on that. I'm not touching anything volatility-wise. So, no, nothing. Sit on it. Can I show you the JP Morgan trade again? If you let me out of here in about 10 minutes, you're going to get the email with the screenshot of it. But here it is. I'll leave it up. So, but yeah, I got to get the replay out to you guys. And then, you know what, folks, we aren't going to do a webinar tomorrow night. Everybody listen to me. It's Valentine's Day. A bunch of smart people got into the damn chat box and said, hey, Wiz, tomorrow night's Valentine's Day. So I think I'm taking my daughter. I think Susie and I are going to take Keely out to dinner. So no, nothing tomorrow night, guys. Enjoy your Valentine's. At least here in the United States, it's Valentine's Day. So let's just do Thursday night, and obviously we ain't doing anything Friday. Edmund, good call. Good reminder for everybody too, right? So, okay. Thank you, Fish. I appreciate it. So, all right, guys, let's go ahead. There's a conversation on Ready Room that I started about Interactive Brokers and a lot of good responses. So, hey, everybody, all my fellow Canucks or Canucks up, get in the Ready Room. Tamara did have a good, there's a good broker thread in the Ready Room. So go to the Ready Room, guys, and get in the broker thread. If you noticed, I didn't jump in the middle of any of that because that's, you guys know where I have to be just for commissions purposes. So get in the Ready Room. Tamara had a great thread going on the on this. Tamara, thank you. I appreciate that. That is a where is it? It's down here, guys. It's somewhere. Just trade down here. There was right here. This is a great thread. Let me put it in here. 16 responses back and forth. So here you go. Let me just put the link in here so you can grab it and click on it. Maybe get in there right now and start going back and forth. So all the Canadians, maybe you guys can jump in here as well and say, hey man, here's, I got Canada questions or stuff. So here's the Ready Room thread, guys. So click on that and you can go to this discussion in the Ready Room. Okay. So on that note, with my beautiful daughter getting home, say hi to everybody.
Hi.
All right, guys, that's what it's all about. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll talk to you guys tomorrow. We'll see you.